right? This is a special lecture that, as you can see on the screen, syllabus revision, which is effective for the first time from June 23. The pilot paper has been released, and I have already done a session to explain to you the rationale behind this syllabus change. So basically this, I would say, is a major change in the sense that those students who believe that there is an auditing component of SL1, SL1, again there is auditing. So that probably now you have to change that perspective. So SL1 is a multidisciplinary paper, a paper that enables you to be a holistic chartered accountant who looks from many angles, not just accounting standards, right? So this syllabus change further validates that statement. Why? This requires you to connect risk, business risk, what is happening in the business world, how a CFO should relate to the financial statements. In ensuring, like LKS 1 says, what is a fair presentation? The connectivity between SLFRS and accounting policy and how it could trigger a material misstatement. 25% of your syllabus has been revisited to look at from CFO's perspective. So during this session, you will, number one, conceptually understand again rationale behind these learning outcomes, the most sensitive learning outcomes, right? That relates to risk of misstatements, even internal control. And then we will go into the latest pilot paper that has been released. It's not just one question, the entire paper we can look at. I mean, it will be a very good benchmark for testing going forward. So therefore, we will be looking at that pilot paper first, after refreshing what are these essential knowledge component. Before I get into that slide, you can see this is something I presented to you at the start of the course, right? To say that when this was announced, CA Sri Lanka issued some guideline as to the rationale behind change. There is a CFO perspective to risk of misstatement, and then there will not be audit procedures, so there is no reference to auditing standard. Having said that, we should appreciate one thing: we cannot explain risk of material misstatement without some knowledge of auditing. So where is the now open book, right? When I say some knowledge of auditing to explain risk of misstatement, we have to look how auditors define risk of misstatement. What assertion, what inherent risk, what control risk, those concepts you need to still understand. But the lens through which you are looking is the CFO perspective, right? How CFO looks at, that's where any organization has to manage risk. If not, that organization may not be profitable, that organization may not survive. In that risk management framework, like COSO, if you look at the COSO 5 components, which is already in your syllabus, do you know the component 2 is about risk assessment? And that risk assessment, how it connects to financial reporting, is what you will learn in this session as well. And then we will take a more practical example that, like discussed in the pilot paper, taking that holistic 50 marks case study, we will specifically learn how to analyze the case and how to come up with the answers, right? So now the most critical learning outcomes, as you see, this is another interesting questions. That is, you might ask, where are the open books now? Is there auditing standard books, etc.? I have already, again in my intro, I already clarified now that big auditing standard book, of course not there, right? This is not auditing. This is not advanced auditing, right? There is no auditing. No auditing open book references. But remember, I said auditing knowledge is still important. You cannot explain concepts in materialist statement without auditing knowledge. But then there is no need to by heart. Auditing standard, refer to open book, find in answers, not required. Okay, so that's not required, right? So be happy. And then another reason to be happy, now this is your open book supplementary. It's already mentioned in the pilot paper that this is going to be available, and you can go to the CA website under supplementary and see that these already existing chapters, this they communicated in the initial syllabus revision back in January, that these critical chapters that deals with true and fair view, going concern, internal control framework, all that is open book now. But I warn you, of course, see about 100 plus pages. Are you able to read these 100 pages during the exam and copy paste? Definitely no. If you are preparing like that, you are preparing for failure. Having said that, the benefit is such that if you are a very sharp student, you know which paragraph will be more important in this book, which you can carry to the exam hall without taking that very big auditing standard book. Those sensitive pages, sensitive paragraph, you will highlight. And I am happy to say I have already done it. Now the sessions that I will upload in future, you can see every single paragraph which is important has been analyzed. Short notes you can make while watching the video. So don't underestimate the effort behind this course. And the beauty there is you can watch at any time. If the exam is next month, you can prepare and do. But you need to have that discipline to watch the video early, do your writing early, then definitely not just 50 you can have or you can achieve prize winner. You can be the prize winner of this paper. Be a serious student. If you think that, oh, this is ABR is about accounting standard consolidation, do a lot of consolidation and only accounting standard, greater chance of failing. Look at even the pilot paper, how accounting section has been structured if you really look at it. A lot of financial reporting issues. There is no complicated work in that you have to sit and do the consolidation. It's about interpretation. Look at the 50 marks question in the pilot paper about the goodwill calculation, questioning whether significant influence is there, the control or a joint control. That is the CFO's role. You have another paper, right, for financial reporting dedicated. So this paper is all about the power of a chartered accountant is to exercise judgment. So to be able to exercise judgment, you need to really look at from a holistic angle, applying different technical standards. So therefore, it's very, very important that you take a full view of this pilot paper and then properly prepare for the exam. So without further ado, let's get into a quick refresher, maybe in 10-15 minutes. What has changed? And then straight away I'll open the pre-scene, analyze the pre-scene. Let us see how examine. Now see, when I discuss pre-scene in this session, assume that there is no unseen. That's the way we always do. So don't look at your unseen. We will predict from the pre-scene what types of question examiner can come up with. And then, of course, we will go to the unseen and then we will formulate our own answers. So that's very, very important. Don't ever be a student reading answers. Again, that is, I don't like to use the word, but I will use a killer approach, right? Killing your creativity, killing your confidence to be yourself at the exam and to confidently write. So as a lecturer at this level, our duty is to make you confident and give you and to guide you how you should come up with your own answers. All right. So the most critical learning outcomes that have changed, and also remember the most powerful document that you should look at before the exam is the syllabus document. And again, in this case, these changes in learning outcome is very, very important. And remember, syllabus has a two critical column, that learning outcome and what examiner means, or what Sri Lanka wants you to achieve in terms of specific knowledge. The second column really clarifies the concept underpinning this learning outcome. And if you are lacking this, you will not be able to answer. And if you read this carefully, you will know which paragraph in your open book that this particular knowledge component has been addressed. So that is very important. So I have taken this heading of this slide is to say most critical LOs, right? Now look at it. If I take now, then we can actually, when we look at the pilot paper, we can see what actually examiner has tested. We can straight away read, is it 3.3.1, where you evaluate in a given case study scenario how significant business risk. That's why I said course of framework, right? So course of framework begins with the control environment having good governance. The next step is to do a risk assessment. In this risk assessment, if there is any business risk, whether that business risk is going to result in a risk of misstatement. So your understanding of what is risk of misstatement is the key, and that is the very first learning outcome. Demonstrate the meaning and components of risk of misstatement, not in the context of auditing, but in the context of FRF. So what is FRF? Now again, this is where, if you are a brilliant, you have a very good conceptual understanding, anybody you can explain now what is FRF. So there are fair presentation and compliance framework. Our fair presentation framework, which is very often used, is SLFRS. Right? So in SLFRS, how can I explain ROM? And that is the very first question in this pilot paper examiner has tested. Remember, this demonstrate is not a high order action verb. The action verb is very critical. When you say demonstrate, you are demonstrating your conceptual understanding that I know this concept. But when I say evaluate, or when they say evaluate, you need to really exercise your judgment in applying theory to a given scenario. In this case study, they have given a case study about apparel industry. If you are saying inventory is a risk, what is your thought process? Why inventory is a risk based on the case study information? And that is 3.3.1. Whereas 3.1 examiner has tested. In the pilot paper, they have tested, okay, explain or demonstrate the meaning of the same thing, risk of misstatement in the context. So to explain this, I said the second column is very important. It tells you what need to be there in your answer, right? And that is what? Using the concept of IR and CR. That is why I said, although auditing standard book is not there, you have open book, still these concepts you need to understand. Inherent risk. Remember COVID. There is an inherent risk that you get COVID. Okay, because it will spread very fast, and that is inherent risk. Whether you wear a mask or not is a different story, but the chances of spreading COVID is very high. That's inherent risk. All right. So the way you can control, if you are a vaccinated person, you reduce that, and you wear a mask, social distance, in all this control measure together, risk is lower, right? And now that way, inherent risk is the susceptibility. Susceptibility means possibility. Possibility that an item in financial statement may be misstated because by nature it is complex. Inventory valuation in some business, the valuation assertion. Why I use the word assertion? All that you need to learn. Remember again, in this, when we say misstatement in the context of financial framework, what assertion? In preparing financial statement, you may want to write assertion. In preparing financial statement, you will see what some of these things what I explained maybe in the answer when you look at those question number 1. So that is the power of knowledge. Let me again repeat what I am saying now. Assertion. In preparing financial statements, management explicitly or implicitly make assertion. That means they represent my inventory is fairly presented. Fairly presented means you apply LK2, cost O and RV whichever is lower, and that is fair presentation. If there are non-moving stocks, you need to explain given the nature of the business, the chances of non-moving stocks are very high compared to other business, and that is inherent risk. Right? So in that context, you know what assertion means. Management assert that inventory is fairly presented. But you need to really look at that assertion, right? So how management say that they think there are control, but you need to really evaluate whether those controls are working. What I was trying to explain to you, here you get a theoretical understanding. The examiner has tested this in the pilot paper. Here is a good way to give a case study and test that. Then what is this? Again, that is a theoretical. I have covered now that as well. Demonstrate the assertion. So this is what I just explained to you. Let me repeat. In preparing financial statement, management explicitly means they say we are a going concern, explicit in writing. Implicitly, no need to say sales is properly accounted, proper cutoff. Every sale is accounted. Is it required to write? No. When the sale number is given, it is implicit that it has all the sales that took place during the period. That is completeness assertion. Correct period, that is cutoff assertion. At the correct value, it is accuracy. Likewise, and that only the sales that actually took place accounted, that is occurrence. If occurrence is not there, it can be a fraud. And then when sales occur, there is a debtor in existence. Remember, this level of knowledge is critical for you to score this 25%. And the beauty now in the pilot paper, if you look at this risk of misstatement is very much married to financial reporting in the same case study. And that is your 50 marks. There is a bit of consolidation related questions, the accounting standards, and then you connect those accounting standards to ROM. And that is the holistic view that you will see when we read the pilot paper. Right. So I have covered, this is very critical, 3 LOs, right? Then the another LO, so I am taking this original document which is also in CA website now. If you go to the notice on the education side, in the notice area, they have uploaded the revised LOs, right? In that, did you notice that 3.9 is a new LO? Be careful. When there is a new LO, you need to see what do they expect. But it's a very basic LO. Responsibility for designing and implementing and evaluating internal control. Again, in your journey of being an accountant, finance manager, or a CFO or a finance director one day, right? You need to really articulate, look here, this is, you are a CFO, you are telling finance manager, this is your responsibility to be the second line. I use the word line. What is second line? To be the second line. You will see these terms. These are very powerful model. The 3 lines. You are the second line to oversee financial reporting. You have to check, control is the first line responsibility. right? For example, production manager has to ensure that the quality testing is done. That's the mode of operational control, but still the first line is that. But at the head office, there is a head of quality who will check or who will ensure whether first line, the quality manager has done that work. And then if there is a product quality issue, that's a serious business risk where it should come to internal auditor's attention, and internal auditor will evaluate as the third line, right? Imagine the product quality and there is a claim, and that claim is not in the accounts, and external audit is questioning. The external auditor provides additional assurance, and all these three lines comes under board. So board and senior management, they are expected to set the right tone. That is where another examinable topic, when I say the tone at the top, what is the meaning? Control environment, integrity and ethics, right? And the role of directors, the corporate governance comes to the course of framework under control environment. So under control environment, you have three lines. So that's a very powerful way of explaining this LO. And we will go into detail. If you read the LO, evaluate governance and management roles. Now actually governance role is mostly about the control environment, right? And you know, as a part of control environment, we have elements like there is organization structure, how authority and responsibility is assigned, and how board is going to set the tone in terms of ethical culture, integrity and ethics. So this is an important part. In addition, you should really know that different parties in the organization, like I said, the first line, second line, play a role, right, in implementing internal controls to mitigate why companies have risk and control departments, because that department probably can help, right, if for the organization to see different types of risk and whether the right controls are in place. So that's all those are connected to these learning outcomes. So anyway, during last 15 minutes, 10 minutes, what I covered was 3.9. 3.9 is not a very big, totally new topic. It's obvious topic, but it is less obvious unless you really reflect. What does it mean? Who is actually responsible for control? Is it the auditor, internal auditor, external auditor, or CFO? Or is it the business manager? So clarify that. So that at your level, you should be able to clarify. So that is our starting point. And now we are ready to analyze the pilot paper present. This is a very powerful slide that I presented to you. At the start of this course, you may have ignored that, right? But that was having understood what is behind in this, the CFO's perspective to risk. So, behind the numbers, so you all are preparing numbers. Most of you are in finance, numbers are there. But the story behind numbers are very important. So that is where this assertion comes into the picture. Somebody says numbers are correct. Somebody asserts, let me again tell you what I mentioned under assertion. In preparing, you will again write. This is fourth time I am repeating this. In preparing financial statements, management, what are the two words? Implicitly or explicitly represent. What's the keyword? Represent. Right? Represent that financial statements are right. That representations are assertions. And then if you look at auditors, essentially audit is there to ensure that these assertions are okay. But forget the auditor now. From a CFO perspective, there are various business risks. So again, in the pilot paper and the LO that I mentioned to you, it's very important that you understand what is a BR. See the BR definition given in your study pack. And even if you take any other framework, COSO framework, ISO 31000, anything. Now see, this is where the power of logically learning. Risk. Whenever you say risk, one thing that comes to your mind, you cannot explain risk without one thing. Can you play football without a goal post? No, you can't. We can't discuss risk without that goal post. And that, when we say goal post, that is actually a goal, right? That's objective. So when there is no objective, there is no risk management, right? So risk management always revolves around objectives. And then when you have objectives, there are strategies. Without these two, it's very hard to discuss risk. So if I take any definition of risk, the definition given in your study pack, the auditing standards, or any other framework, especially let's say your study pack, right? So the business risk can arise due to condition, event, action, inaction of the organization that affect their objectives and ability to execute strategies. So, what do you mean by event? Suddenly, terrorist attack, COVID, something happening, event, fire, right? Event, action that company has taken. They have started doing illegal business. Inaction. When every competitor is digitized, you are not, and customers are going away, so you have a going concern issue. So like that. So this is a definition. We'll come to this definition. And again, we will see one of the question in your paper, pilot paper, talks about, that most critical learning outcome that is examinable, I think 3.2.1, if I'm not mistaken, evaluate how business risk is going to connect to risk of business. From that perspective, I put this slide. See, this is very current slide when I presented this at the beginning of your course. Now we are talking about economic crisis in Sri Lanka. And around the World Economic Forum foresee a crisis globally, especially US, Europe, they are struggling. And look at our export sector. That's the timely case study given to you. One of the largest $5 billion industry. That industry is relying on this, Europe and US market, and if they are struggling, finally it creates a lot of pressure. So eventually in your financial statement there is a revenue drop. But then from company's perspective, when there is such a revenue drop, there is a lot of pressure. How can we increase this revenue? That pressure might even create, remember fraud triangle? So again you will see the fraud risk is a very important phenomena that as a CFO you should, when I say you are a CFO, you should be happy, right? So chartered accountant really gives you the edge to be a CFO, right? So therefore this subject is a wonderful subject where you connect risk management to financial reporting. Okay, so the revenue drop, how it can affect my assertion? It may be cut-off assertion because now management is under pressure. Is there any shortcut where still we can achieve our revenue target? And then obviously if the business globally, customers are not doing well, the inventories are not moving according to standards. Now see, when the inventory is not moving, why? Because this is coming from the crisis. The customers are not doing well. The CFO should think, okay, what is the risk? How about my inventory valuation assertion, right? So some product are not selling now. This particular fashion item not going now. The consumers are not spending much on certain fashion items. Now let's say they spend money on basic items, right? Essential items. Okay, so what? Some product line they are going to discontinue. That is there in the company's risk grid from enterprise risk management. Now as a CFO, you want to look at some of these business risks. How can it affect my balance sheet? The moment CFO hear this product line discontinue, ask the question, where is the CGU? Perhaps the even goodwill has been allocated to CGU. Now, where is the impairment? So that is where I explained to you previously, when this business risk comes, some of the numbers should change. Has it actually been changed? So whether this assertion has to be revalidated, right? The PP impairment, PP valuation, inventory valuation, revenue cutoff, right? And that overall fraud risk coming from the target pressure, coming from the economic pressure, the fraud risk. Very powerful with articulation. Now, are you ready? So we are going to start now the very first paper with this syllabus change, which is given as a pilot paper. I'll also come to this interest in, I think I explained to you partly that when it comes to responsibility, the new learning outcome, right? So that is already, if you take the control environment, right, by definition, control environment clarifies the role of the board who set the tone at the top. Always in the exam you may want to write, if there is a question that deals with the control environment, they set the tone at the top. That means with this tone, what does it mean? So creating a culture of integrity and ethics, ensuring that there is a proper organization structure, assignment of authority, and having right people in the organization, and the board independently challenge management, the board oversight. So that is at a board level, and that is, remember, this is a very powerful model. I said 3 lines. The governing body of the organization, they exercise this integrity and ensure transparency, so they are accountable to all stakeholders. But remember my example as a production manager, when it comes to that operational control, here operation, see this course of framework, there is a separate chapter, there is a separate video, detailed one explaining every critical paragraph of your study text. Now it has become open book. That's the power of study text. But no point of memorizing the study text. In any context, how do you apply, that matters. So, my example that the product quality, ensuring product quality, the first line is that quality manager, as a part of his job, whether he's making sure that he manages the quality risk, as the first line. But we know there is another person called in head office, the quality, let's say, head of quality. And under him, there is a team to ensure that there are so many manufacturing locations. In every location, the quality control processes are being followed. So management has their own oversight function. And one, if there is a difficulty, they will explain, okay, this is not right, this is the way it has to be done. So they give the expertise, support, they monitor, they challenge any risks as the second line. Now take finance, for example. Some of the control, if you look at in an organization, there is somebody in HR is handling maybe some payments. And while doing the HR job, but as the accountant, you may make sure that HR manager is adhering to control. Like you can spend money, make sure you have relevant, procurement process. You can't just spend money on any HR activity. You follow the company's process. And then any money spent, have the supporting documents, any balance money you deposit. That, ensuring the controls are implemented, the CFO will play the second line of defense. And finally, the HR manager screwed up. CFO was sleeping. In that point, the internal audit as third line will ensure, or has to ensure, we can't say will ensure, should ensure that these control breakdowns are reported to governance as independent. So the big difference you see here, that these first line, second line, both are called management. The internal audit is independent. And then if you take external auditing, again, let's say there is a fraud as a result, right? Then external audit also may identify, may not, because external auditor's job is not to identify fraud, but to give an opinion. However, in giving opinion, external auditor will look at controls. So you see, this may be this half an hour plus is a solid refresher of this syllabus change, the relevant laws, and that the role of CFO connecting risk management to financial reporting. So, are you ready to analyze the new paper?